My name is Vlad, and I'm here to introduce StackBits to you. StackBits is a BTC first DeFi bank that's easy, safe, and cheap to use. Okay, sorry. So, I come from a finance background. I was part of the UK financial institutions in the beginning of my career, and I was also a personal fan of finance. So, what I can summarize the 100 years of modern finance to you in essentially one slide. The main question I think most people have is, what is the best way to store your wealth? And the traditional finance solution is an index fund. So an index fund has the three characteristics that you want your investments to have. It will protect you from inflation, you would benefit from compounded interest from the dividends, and you will be divisible, meaning that you can invest with as little as $100. However, you can also look at the other options. So other options would be gold and real estate, and as we can see, they both have the benefit from protecting you from inflation. However, with the other two characteristics, which are key, are not present. And when you come to the markets like Vietnam and Southeast Asia more broadly, and developing markets even more broadly, the issue is that the financial system is not as developed as in some of the more developed economies. And in reality, what people have is, let's pick Vietnam as an example. You cannot invest in a low-cost index fund that would, quite easily. The stock market in general, based on the discussions we've had, is it's not transparent. So people usually people default to investing in particular stocks, which is super risky, or they go for some derivatives, which is not even suitable for a normal folk who is not a full-time trader. So this is where we think Bitcoin comes into play. So Bitcoin already gives you the inflation protection and is divisible, meaning that you don't need to buy one Bitcoin to invest. What we are solving is the third component, the compound interest. So one would ask, okay, so why do people care even about it? And someone can present the statistic, which is that there's only 8 billion Bitcoin in DeFi right now, while the total market cap is 2.25 trillion. So it's like only 0.4% is currently employed. So one can say, do people not? Maybe people just don't care about earning yield. And there are several reasons for it, based on the type of players in the market. So there is the Bitcoin maxis who just, they're against anything other than Bitcoin, even like OCAT, they're against all that. There's the professional players, institutional and traders. So, they have, like speaking about institutions, they have a lot of regulations that they should comply with. They have a lot of reputation risks when it comes to something new like crypto. This is the audience that we're not looking at. But what I personally believe in is that there's actually a lot of BTC held in custody, and depending on your custodian, they might not even offer you an option to earn yield, so you're kind of limited by what the custodian is offering you. And the important part about this one is that it actually doesn't get reflected in the statistics. So as we know from the collapse of FTX and BlockFi and others, there's a lot of BTC that is used as collateral for the loans, and there's a lot of BTC-related loans that are happening off-chain. So this would not be reflected in this chart, but would actually demonstrate that there is interest in earning yield on Bitcoin. And lastly, there's the difficulty, security, and the cost perspective. And here I'm talking about the normal people. So if you're a normal person who has a normal job, you're not really, you're not full-time in crypto, you're not really crypto news every day, it would be very difficult for you to even know that such an option exists. The security part, comes from two things. There's the underlying security, and there's also the perceived security. So a lot of people, they might actually research very well where to invest, But the problem is that they would have their account hacked because they don't follow the simple practices for storing the Bitcoin. So there's all sort of layers of security that comes into play where you also take into account the factor that the person is not a crypto person, it's just a normal phone. And lastly, the cost. The cost, I care a lot about the cost because, the same way as the interest is compounded, actually the cost gets compounded too. So, $1 right now paid as a fee actually translates to whatever, $10,000 in 10 years. Can we go to the next slide? We believe that there is a big market for normal people to not only hold Bitcoin but also earn yield on it. So some of the other players that are targeting a similar market is Celsius and BlockFi. Both have gone through restructuring and both have defaulted on their obligations. And there's a simple reason for it, is because for the yield they relied on off-chain loans and off-chain lending, as well as they are non-custodial, which certainly presents risks in the current developing regulatory landscape. And then there's the crypto-native ones. I picked Babylon and Aave. So this is the TVL for Bitcoin only, and they solve the solution. They provide the solution specifically for Web3 people because it's fully on-chain and it's fully non-custodial. However, that presents the difficulty issue you probably if I had more time, I would actually do a round of hands. Who has ever heard of Babylon? I don't think many people have. So what we provide is we provide the transparency and the custody assurances that you would get from you would get from being on chain, but our customer service model and our sales model is oriented towards helping people make that step between not knowing what to do and having someone they can talk to and advise on what can be done. For the peak TVL, we put it at 1 billion. I asked ChatGPT this morning. I was like, okay, ChatGPT, this is StackBits. What do you think our TVL could be? And ChatGPT gave, actually it's quite it's a good estimate. So this is top of the line, but the calculation is quite simple. So what it did, it said if you have 200,000 users with $5,000, you get to 1 billion. Suddenly 1 billion doesn't look like that big of a number. Can you go to the next step? So what are the ways we're going to add value to the users? First of all is the ease of use. So our idea is to do sort of a banking model, which is a combination of, so for day-to-day stuff, you're going to use your screen, but for anything sensitive that you feel strongly, you feel not comfortable with, you would come in person to a location. So we're planning to use this actual hub as a pilot for this strategy. So the idea is that, if you're a first-time user, and I've had personal experience on this, so sometimes people trust, especially in developing economies, people trust the face more than they trust the website, so they want to see the face. And being on the ground actually helps. And the second thing is localization. Have you ever seen a website which would have, have you seen any Web3 project which has a localized landing page? I haven't. Most of them, the only ones that do that are actually Web2, the ones that I mentioned earlier. If you go to any Web3 website, if you don't speak English, you cannot do anything, right? It's as simple as that. Then we go into the safety. So I'm being honest, we're not going to develop some software that hasn't existed before, but we believe that it actually fits well with our strategy. We want to provide tried and tested code to execute the most sensitive functions. Of course, we're going to use all the tools we have, such as audit and insurance, if we're going to find a partner to provide the safety. And I think we're quite well aligned with StarkNet with the extra bonus point of having the underlying network secured by both Bitcoin and Ethereum, as we heard in the presentation yesterday. And lastly, the cost aspect is going to be targeted by, first of all, not using Ethereum, using Starknet with the lower gas fees, as well as the concept of aggregation, where you don't have to execute, for example, a claiming interest transaction. It can be the transaction can be aggregated with other users, and so the cost is pooled. Vaults work by the same principle. Can we go to the next slide? And what makes me believe that we can execute on this strategy? So first of all is the experience we have. I mean, the most important people I think in any software company is the developers, and we are very lucky that we have 2 hackathon-winning developers on our team already. Our leadership team has experience with successful startup exits, taking the startup from founding it to exiting. We have experience with building communities. I'm not going to go into too much detail because we have the time restrictions. And lastly, me personally, I was responsible for 2 aspects of an on-ramp business here in Vietnam for 2.5 years. So one of them was I was responsible for the Bitcoin operations in Vietnam. We had the largest Bitcoin ATM network here, and we've achieved 10% growth over month-on-month over 2.5 years. And I also was the one to introduce the crypto consulting service, because I understood that there were a lot of people who were interested in Bitcoin, but they didn't have the time. They wanted to have like a human ChatGPT, come and talk to them about, how to do everything related to Bitcoin. So essentially, as far as I'm concerned, what I'm doing in this project is I'm doing the same thing I've done before. We're just going to advise people, instead of just buying and holding securely their Bitcoin, we're going to advise them to actually, how they can also earn yield. And as I told you earlier, we've got already the space, so we are ready to do the pilot. We don't need to find space, and we also have the Googler community who actually kudos to you guys for helping run this thing. This showcases our capabilities in making on-chain more like putting a face to the on-chain market. Last thing I want to mention briefly is the existing partnerships. So through our previous experiences, we've got the indoors with on and off ramps. We have a PayFi partner, as well as the plan is to leverage the Bitcoin ATM clientele into our market too. So what I've mentioned so far was our key product. It will be the key product that will bring users in, and this is what we're going to focus in the beginning on. The plan is to polish that as much as possible, and as soon as we can get a hold of the clients, the plan is to cross-sell other services to them, and it would fit in well also with their journey, their crypto journey, because we expect a lot of them to start, getting interested, and some of them will move from the novice users to like more intermediate or experienced users. And at that stage, we would be able to offer them other services, such as I want to be on the AI fund, so they would be able to execute some trading for DCA in, DCA out strategies with us, as well as using the earnings for paying or engaging in other DeFi activities. Right. Thank you very much. I'm gonna stop here.
Yes, thank you very much. Sounds very interesting. So what's the core state? Like, I know that you put like a fictional TVL, but what is the actual state right now? What do you have built? Where are you building it? How much money you have on it?
Yeah, so we are currently at the demo stage, so we are not live yet. We're still building. Yeah, we've got like we're at, like I would say, it's like pre-MVP stage. We've got something, we've been building a lot of the backend for the operations, but it hasn't been fully, fully released on testnet. But if you want, we can show you the demo.
And the testnet is on what? What testnet is?
So we're using the Sequoia, is it called Sequoia testnet?
Ethereum testnet?
No, I mean Starknet, yeah.
Okay. What are the companies that you exited from? You mentioned that you exited from a couple of companies.
The exited the person who has the exit experience is Dalia co-founder. I think we can maybe we can have a chat afterwards. Yeah, if you want to learn more about that.
Okay.
Yeah, it's not currently not presenting today.
Excellent. And finally, so you, correct me if I'm wrong, but you are people who provide you. For example, if I have my DOMs, I can give you my DOMs, and these DOMs will be converted to BTC, for example, and then provide some yields coming from my DOMs, and then I can take it out. So I can do on-ramp and off-ramp with you, right or not?
So
Wrong.
no, it's a good question. There's going to be different segments of the market. Some users would already have the Bitcoin. Some users would be, we're planning to partner with the OTC market, similarly to what I've done previously, because that's one of the other target markets. These are the people who, despite having other options to invest, despite having knowledge of other options to invest, they still choose the OTC market. So we're planning to partner with them for the offline part. For the online part, the idea is to integrate an on-ramp onto the website in order to protect, have the client as much as possible on our platform. This is the plan.
Okay, perfect. Thank you very much.
I just have one question. So, with the recent regulations where the centralized exchanges, where the audience or the users have been asked to go through the centralized exchanges for trades, do you think this plays well into what you are doing, or do you think there will be some regulatory sort of, just from a user perspective, like I know it's very early, but just want to understand if it will play from a user perspective that, what legitimacy do you offer as an app or as a service, right? So do you think it will have any significant effects, or is it more from a positive side of things that users would be more interested to kind of come and invest in the platform? How will that play into the product?
So when it comes to regulation, I mean, first of all, we don't know how it's going to work. There's still a lot of uncertainty, so nothing is very clear. But the way I think about it, I will share my personal perspective, is there's several factors that make me positive about what would happen. So one of the factors is that, as I mentioned previously, regulation is like a twofold. So people behave in two ways. Some people love and use the regulated options. Some people actually, that's one of the reasons for them not to use it. So, so far Vietnam has been, it's been known that the OTC market is kind of in the gray zone, and I don't know what's going to happen in the future, but there is definitely, there's a large clientele that, for them having something regulated would be actually a downside that would move their money out. The second thing that the second aspect that I think many people don't realize is that I've spoken with some of the upcoming exchanges, and there's a lot of risk for them to go into these unknown territory, let alone coins, but earning yield and the DeFi and the legal structure and who is the counterparty. There's no one to sign the document with, so how the auditors are gonna look at it. So I believe that there might be a future where the the banks that are now buying the licenses to operate the centralized exchanges, they're just going to become the on-ramp and off-ramp. And the risk for them to do others, the risk for them to offer other services such as earning yield would be limited. So, in that case, we wouldn't really have a competition from them, and they would actually, the only effect they're going to have is they're going to, distribute Bitcoin information even more within the population. So they're going to grow. The target audience is only going to grow. So they would, I can see a future where it would actually be a symbiotic relationship between us and the regulated entities.